बाद से चांद से जुड़े मिथक बदल जाएंगे, कथानक भी बदल जाएंगे और नई पीढ़ी के लिए कहावतें भी बदल जाएगी। भारत में तो हम सभी लोग धरती को मां कहते हैं और चांद को मामा बुलाते हैं। कभी कहा जाता था चंदा मामा बहुत दूर के हैं, चंदा मामा बहुत दूर के हैं। अब एक दिन वो भी आएगा जब बच्चे कहा करेंगे चंदा मामा बस एक टूर के हैं।
Well, goosebump moment, guys, wasn't it?
We've created history.
No, look, I mean, this is like a marvel in itself, that how Indian space program has now reached. I mean, I'm just thinking the punchline is that when the sun set yesterday, we all started looking at the moon.
Yeah, absolutely. Yeah. I at least did. I mean,
yeah,
obviously there was nothing visible.
Yeah.
There was no Vikram lander visible, so but it felt, extreme joy and pride that yes, the Indian flag is, up there.
Yeah, I mean, you have to really look at the success of the Indian space program. Yeah. The success of Indian space program, I mean, it is just from an unknown entity couple of decades ago to something which really could be called as an unforgettable. We've not just made a global mark. What is important here is that we've really made our presence felt in the global arena now. There was a time when the global space program was dominated by USSR, then it became Soviet Union, then it was dominated by the Western countries. But the fact that, India has really taken a giant leap forward, first Mangalyaan and now Chandrayaan, it just tells you that, how we have really arrived on the global space research map. So it's a proud moment. It's a moment which I think we would relive again and again for many decades to come.
Oh yeah, absolutely. August 23rd, 2023, 23, that's going to be etched in each and every Indian's mind for many years to come. And we have created history. The moment Chandrayaan 3 successfully soft landed on the moon at 6:04 p.m. In fact, it was indeed a textbook landing for India's ambitious lunar expedition as Chandrayaan 3 successfully lands on the moon's south pole. And remember, this is the first time any country's rover has landed on the south pole of the moon. And India is now the only country to ever do so. In fact, congratulating ISRO scientists, PM Modi said that the achievement is going to change all narratives and stories about the moon. In fact, congratulations are now pouring in from all over the world as India makes a mark on the moon. Let's hear out some of the reactions.
On spot because of the review process. I also thank my thanks to the Chandrayaan 3 project executives, spread
Mission Director Srikanth, Associate Project Director. I only see as the reflection of the effort we have put, that people, they have been helping so much. They were part of the team too.
On spot because of the review process. I also thank the...
All right, certainly a historic moment. But that aside, let's also take cognizance of how things are shaping up across the globe then. And the global markets, well, are in the spotlight. And that's largely on the back of the fact that you've seen the NASDAQ extend its 3-day streak. You had the S&P 500 managing to close up in the green, and Nvidia, I think that's been the stock that was really keeping investors chattering. It reported its second quarter earnings, and in fact, it has been a pretty strong set of numbers. Their Q3 data center revenues as well have grown at a faster clip. So, Nikunj, clearly just going by the kind of momentum that we're seeing from the global markets, finally a bit of a break and celebrating Nvidia's earnings.
Break from?
Break from the consolidation on Wall Street, the losing streak as well that we've been seeing.
No, Aman, look, you have to look at the global setup and Nvidia, how far Nvidia can actually carry. And not that global markets were in, Nasdaq was in any kind of a tizzy. Now it's Nvidia, and now going forward, you need to look at what will happen from FOMC. So Nvidia numbers are important. They will give fillip to the market, and then you got Jackson Hole. So can Nvidia numbers really carry the global markets forward, or could a dampener from FOMC in a sense have impact on how markets would move later this week? So frankly, from a global market narrative standpoint, there is no bad news. There is incremental positive news. It's not going to be having impact in terms of dragging the markets down. Suddenly, if we come on the right side of the Jackson Hole, then the market macro concerns which have surfaced up around US 10-year paper, US bond yield, China slowdown, the narrative could start changing. So today global markets would take a sigh of relief because of Nvidia numbers. The impact of that would be felt on the way how Indian markets will open today, and then starting tomorrow and then over the entire weekend, it would be all about Jackson Hole, where markets are hoping to understand that, what kind of spin the US Fed would give in terms of understanding how the course of the commentary would be. So I don't think global markets are going to suck the momentum out. Similarly, global markets are not likely to inject a lot of momentum on the upside. It's status quo with a positive bias when it comes to the global setup.
Yeah, because for the last 3 trading sessions, you've had the global market handover been very, very strong, both from the US, Asia, as well as Europe too. But talking about our markets, Nikunj, it's such a tight range that we've been in for the last 5 trading sessions almost just about 100 points, and sometimes not even as much on a daily day from the lows to the highs.
See, Aisha, you have 2 things which are at play yesterday. I mean, one, you did see an incremental buy figure from foreign institutional investors, and second, you got a big uptick in the bank Nifty. And now there's news in Reliance in terms of how they are valuing the retail arm. All these 3 factors put together, which is a mild bout of short covering, price action, constructive price action in the bank Nifty and Reliance, and little bit of global support. Can these factors align themselves, and can markets now nudge to the upper end of the range? Well, this market is not really giving you a very clear direction. We are stuck in a range. There are days it appears that the range would be challenged on the downside, but thankfully that is intact. Similarly, there are days where you think that the range will be breaking out on the upside, something or the other goes wrong. So markets are stuck in a range, but this combination of factors which I mentioned, which is decent global cues, bout of short covering supported by bank Nifty, FI turn net bias, and news in Reliance. Can these 4 factors come around and take the markets to, can the range decisively break? That's how you would look at the market. For the small and the mid cap stocks, look, those indices are making a new high on a daily basis. Mid cap index hit an all-time high earlier this week. Small cap index, I think, is 1% away from an all-time high. You can't find too many fault lines when you are making new high on the market. There are no large triggers or cues. Individual stocks have to be monitored in that basket, but this combination of 4 things I said, is that good enough to take the markets higher? Let's see.
Yeah, let's see whether the banking recovery actually stays put from what we saw yesterday when banks did recover, and across the board, small caps, PSUs, private banks, they all held out very smartly. It was an over 1% move that you had in the Nifty Bank. Let's see whether that move sustains or not. But yeah, the FII figure finally turned a buyer, although a minuscule number.
Yeah, see, there's no pattern.
Yeah.
Let's talk about the larger trend. My view is the larger trend is that for 2023, there were pockets of FIs were big sellers for the entire year for 2022. And there were periods of net buy. Similarly, in 2023, I think the big picture is that there would be net buyers and there would be periods of net sell. China slowdown trade, the China comeback trade has failed again. And on the margin, that surely will have an impact on the way how flows will come back into India. So while we can look at the last 8-10 days and say, okay, FIs have turned net sellers, but that for me, I think is not any kind of a pattern which you can establish with some kind of an authority. So on the flow front, there is nothing which could be called as a large trend. I mean, not that even if I add up what foreign institutional investors have done, it is not a very large, sell number. It is in comparison to what they've really, bought. So my limited point is that last couple of days, yes, foreign institutional investors were net sellers, but I think the big trend, which is what we should focus on, is that for 2023, I think India will get net inflows. That is our understanding. And once you get clarity on how inflation and how Fed is going to move, I think the flows only will get cemented further.
Okay, that's the overall picture when it comes to the liquidity situation. But let's also put the spotlight then on Reliance Retail Ventures. Just yesterday, they announced that Qatar Investment Authority will be investing close to 8,278 crore rupees in the company for about a 0.9% stake. And this is going to value the company at about 8.27 lakh crores. And that's going to make it rank among the top 4 companies by total equity value in the country. And even when it comes to the valuations, Nikunj, I think that's largely in line with what the estimates were for Reliance Retail at around 100 to 110 billion dollars.
Reliance is sum of part. How do you value the old economy business? How do you value retail? How do you value the geo business? And how do you value the hydrocarbon business or the new energy business? Now, this deal, I think, has only established the base now for Reliance Retail, and it is now at about $100 billion. It is a very big positive than what it, let's say, was earlier in terms of where the first deal was done. So the second deal now establishes the value of $100 billion in dollar terms. In rupee terms, the number is going to be even larger for Reliance Retail. But this is a benchmark which brokerages have already talked about in terms of the real value and at which the potential value would lock. So while this news and this deal only establishes the real value, what markets have been talking about it, it is not at a very smart premium to what the assumptions were. So this is not going to move the needle in terms of a stock upside. Now, 28th, which is when the later this month is when the AGM is. Now, could we get a hint in the AGM now that the real value for the deal has been established for Reliance Retail about IPO planning? Are we likely to see anything incremental in terms of Geo? Are we likely to see anything incremental in terms of what the Geo Financial Services plans are? So ahead of AGM, I would imagine that this time around, just when we thought it's going to be in a dull event, now I guess curiosity levels would be high. So in the run-up to the AGM, post the deal and post the listing of Geo Financial Services, I guess market curiosity would be high to understand that what more and what's next for Reliance Industries and what is Mukesh Ambani likely to indicate in terms of the grand plan for Reliance. So the deal, I think, establishes the real value, what brokerages have been talking about for Reliance Retail. But since this is in line with what brokerages were expecting, you're not going to see a big upgrade cycle. This is more like a stamp of endorsement that the value what we talked about, I think, is something that the buyers are ready to pay.
Yeah, in fact, let's bring on board Sushil Choksi as well very quickly and get in his take on Reliance. Sushil, hi, morning. Good to have you on the show. Sushil, with Qatar sovereign funds investment into Reliance Retail, I mean, the retail valuation has gone up 2x in about 3 years. Do you think this move could act perhaps as a soft floor to Reliance Industries, if not significant upside?
Good morning, Aisha and Nikunj. Thanks for having me on the show. It certainly establishes a value that everybody in the research reports have read, that Reliance Retail would be valued at 1,300, 1,400, 30 times sales or 33 times EV to EBITDA. So various numbers based on growth patterns and number of outlets they've established so far. Based on what I can make out, Qatar, is it the first investment which they've accepted, or like 3 years back in COVID, they will accept few more rounds of investment before they plan the listing? So how Mukesh Ambani's speech on AGM on Monday 28th pans out on this direction, that needs to be seen. But it is definitely a direction that now 3 years are done for the previous round of investment, which had come in at half the value than what current round has happened. So Reliance Retail future looks promising, because these people will be investing more and more money in rolling out more outlets, more formats. Now Geo Financial will be supporting all the retail distribution and marketing in terms of financing, and the competitors too have. So the growth path is very open, and looks like Reliance Retail firmly establishes the value which all the brokerage reports have indicated so far in the region of 1,300. But it's good that the market is established with a dollar check which is put in the balance sheet, and it sustains from here and grows faster from the current value.
Sushil, this deal in a sense is only endorsing the real value what brokerages are doing. Brokerages had really projected for Reliance Retail. So do you think while this is positive, it is endorsement of the obvious, it is not going to move the needle for the stock per se in the short term?
Because my personal take today is Reliance Retail news will drive the Reliance stock up, and possibly if there are any further add-on announcements on the AGM, the stock move in the same direction as the previous peak we saw which before Reliance demerger happened. Because today we've seen news on retail. We don't know how many more news Reliance Retail plus Jio Telecom and the new energy ventures wants to throw out. I mean, give out to shareholders with a roadmap for next 2-3 years. Like yesterday, your daily carried that Reliance Solar is going to come out with 20 gigawatt of production in next 12 to 24 months. And this is end-to-end manufacturing capacity. So based on various other parameters, you need to look at what is going to happen in terms of direction where stock is concerned. But it definitely established that Reliance Retail at 1,400 rupees deducting the stock which is held by outsiders, Geo valuation in the region of 900,000 bucks, petroleum at around 700 to 800 rupees, and Geo Financial is already valued in the market, the new vertical. So sum of parts, if you take a 2-3 year vision, still the stock has definitely a chance to perform better than the market. And looking at that direction, possibly people will establish that in 24 is a challenging year for the globe. Current year is already surprising where dollar strength and US interest rates are concerned. India interest rates are not going to go down this year. Next year, there is a possibility. We have high inflation. And looking at all the parameters, hiding in a large cap like Reliance where the direction is positive would make sense to a long-term shareholder. And that's what people will look forward to with this kind of announcements.
Sheil, thanks so much for giving us your take on the big investment that has been made in Reliance Retail. Let's shift focus then and talk levels on the index. Kunal, Bothra and Nooresh Merani are here to discuss just that. And Kunal, yet again, it was the broader markets that took leadership. What's the view on the index at 19,440 levels?
Yeah, I think the markets did pretty well for itself, not just the broader markets, but I think even the Bank Nifty yesterday outshined specifically many of the mid-cap private sector banks where we saw action coming back. Now we need to see in terms of levels, 19,550 on the upside. That could probably be a turning point for the index on the upside. So I'll wait for a confirmation to close the short positions which have been created yesterday on the Nifty. And my sense is that with the Bank Nifty looking a bit more stronger, if the large cap private sector banks, the likes of, for example, ICICI Bank yesterday did pretty well, but if the likes of HDFC Bank, Kotak Bank, and such the names, if they start to participate, say for the next couple of trading sessions, then I think the move could get a lot more powerful for the banking stocks. So that's one sector which I'll definitely keep a watch on. But in terms of levels, 19,550 could be a minor breakout point for the Nifty.
Right. Since not much is happening on the index, let's talk about the Nifty Bank, whether yesterday's recovery will stay put.
So, interesting recovery on the Nifty Bank. It is two ways to look at it. It's not just the bank index which did well. The mid cap and the smaller banks did really well. And a lot of, say, reversal seen in some of the large banks. So, Axis Bank, which for the last 2-3 days was making a recovery, has made a sharp pullback. You have ICICI Bank making a pullback. It's only HDFC Bank which has not made a pullback. So, clearly a good bounce in the Bank Nifty and from a very important level. So if we look at the lows which were made in May to June on the Bank Nifty were closer to 43,500 to 700. And in this fall, we bounced back from 43,600 levels. And this is equivalent to 18,800 level of the Nifty. So good bounce from an important zone, which opens up an upside towards, for now, retesting that 45,000 mark also, which was the high for the month of August, roughly. So for now, expecting a move towards 45,000, 45,200, and more so a much larger move in the smaller and the mid-cap banks.
Find out what our chartists are betting on. Get ready for some top recommendations. And Kunal, 2 buy calls?
Well, yes, RBL Bank is the first stock which I would suggest as a buy. I think it's a very interesting chart. The stock is recovering from 215 odd levels from where it retested the previous major retracement in terms of the rally. So would suggest a buy with a target expected closer to 240 plus for RBL Bank, stop us at 223. And BEL is something which also looks extremely attractive. Yesterday closed at 134 plus mark. Again, a stock which is riding on very high momentum given on the short term charts. 140 as a target, stop us at 131.
Okay, Kunal. Sorry, Nooresh, let's find out what's on your radar this morning.
So first is a buy on Indian hotels, which I continue to maintain the buy, which was initiated a couple of days back. The stock recovered back from the recent range of 380 and now made a new 52-week high and an all-time high. Breakout done yesterday. Any fade-off move today is a buying opportunity on dips. Expecting a minimum target price of 450 in the short term. This flag breakout could take it much higher. And it's a overall sectoral move. We've seen EIH, Mahindra Holidays, a lot of them move well. So there is a new leg coming up in hotels, which is where Indian Hotels remains the leader. A stop loss at 385, target price of 450. Second is a buy on Bandhan Bank, which corrected from 270 all the way down to 220 levels. Made a good trading range between 220 to 230, 35 levels. Yesterday, the stock has closed about 235. A short-term breakout done. And expecting a move now back towards 270 levels. Stop loss to be placed at 230.
Right. Okay, let's talk about some more stocks which are going to be in focus. And you can't take your eyes off from Jio Financial Services. The fact that the committee already postponed the removal from the index for about 3 days, the removal is now going to be on August 29. But Somit is here to throw more light. Somit, it continues to hit lower circuit now. What happens next?
Well, if the stock actually continues to hit lower circuit for another 2 trading sessions, then again the removal from the index would be deferred by another 3 days.
Okay.
So this is an ongoing saga, and most likely this will go through until and unless all the passive mutual funds are done with their selling when it comes to Jio Financial. Now, obviously, they had holdings in Reliance Industries, hence they got Jio Financial shares. And as per analysts, around 14.5 crore shares selling is expected when it comes to Jio Financial, because if and when Jio Financial gets out of the index, they need to sell their holding in Jio Financial, and hence we are seeing such kind of a selling pressure. In fact, if you see on the first day, there were nearly sell orders of around 3.7 crore shares. On the second day, it was around 11 crore shares, and on a third day, that is yesterday, it was more than 14 crore shares of sell order. But actual shares traded were just 42 lakhs. So this lower circuit saga might continue for Jio Financial going forward as well.
You know, there is a technical factor here, which is that you got free shares of Jio Financials and you are an index fund. It will not be part of the index, which means you have by force no choice but to sell it out. And I think that in a sense is causing this kind of an havoc. This is an havoc. I don't think this is the real representation of the business per se, at least in my book. I think you mentioned it right, that if it will hit another circuit, then the delay in terms of
deferral of removal
will continue. But the problem is that at what price do you say that this is the real value for Jio Financial Services? I mean, at what price a new buyer comes in who wants to buy Jio Financial Services for what it represents? And I think that price is certainly not 260. That price is closer to 180 to about 200 rupees. That's where
that indicates, Nikunj, that there are many more lower circuit days to come, right?
Yeah. 3 more lower circuits would bring it down 200, below 200 at least.
So the deferment has to happen then.
No, see, this is what our understanding is when we look at the fair value what brokerages have given. So that is a fair value. The buyer may come earlier than the fair value, but the price discovery for Jio which happened was way above what the general fair value was. And now there's a technical compulsion by index funds which they have no choice but to sell it out. So I think there's a technical factor at play. When will the fall stop? The fall will stop when a large institutional buyer or large buyer comes and they buy Jio Financial Services for the promise and for the business proposition they have. And that I think will happen eventually. It could happen today, it could happen tomorrow, I don't know when. But I think that is where the tide will essentially turn. So there is a technical overhang here. The price discovery happened way above the fair value, and the buyer who likes the business for its current avatar, I think will come back. Look, this business has a lot of potential, Somit. I mean, what it is capable of, what it will achieve, where it will go. I think there is going to be a buyer who will come back. I don't know when. I don't know yet.
Yeah, I think experts are saying it'll take maybe, because given that the business is pretty strong, that'll take time. But yeah, we'll have to see how things shape up on this front. But the other big talking point, of course, is what's going to happen with some of those space stocks. And given the fact that Sunil Singhania actually put out a very interesting tweet just yesterday, Somit, talking about that the cost of Chandrayaan 3 was 615 crores. The market cap of companies that are supplying parts to Chandrayaan 3 is up by 50,000 crore rupees yesterday.
Well, exactly. L&T also CLS also came out with this note where they're saying that there is scope for companies like L&T, HAL, Centrum Electronics. All these companies have actually provided material to for Chandrayaan 3, and given the fact that the space market is opening up not only in India but also globally, there could be more orders coming in. But what would be the value of those orders is the biggest question that we need to pose to these companies, and that's how we'll come to understand what's the value of these companies, because as he was mentioning in his tweet that the market cap of these companies have increased by around 50,000 crore. But if the order value is not that big, then at the end the profits would not be that huge as what the street is expecting.
Let's look at these stocks and how they have gone up. And if you look at what we've got, the 1 month change.
Yeah, I have a YTD change right now.
Let's look at the YTD change for some of the companies which are directly, indirectly, they have a presence in the space, in this entire space category. You've got Centrum Electronics, you've got Linde India, you've got HAL, you've got Walchand Nagar. They have a representation and they get sizable business from the entire space category. But the kind of price rise what we've seen, I think it's a case where I could say that these stocks are building in perhaps an impossible kind of a scenario. So Chandrayaan launch, I think, is a big endorsement. Made in India for the world, that whole thesis will get endorsed. The space entire, this entire ecosystem, I think, is going to grow. It will get recognition from global investors. But the stocks which have run up only because, I don't think BHEL is in space stock, is it?
Well, it has also supplied on the component.
BHEL has also supplied.
Well.
See, think about it. I was wondering why BHEL has gone up yesterday.
That's the trigger.
That's the trigger now. So again, I mean, how much of space program will incrementally change business for some of these companies? And the stocks have already run up.
Yeah.
So it's a situation of these stocks have got re-rated and the real business cycle, I think, is still a distance away. See, this is great news in terms of what India has achieved. And the space program and the space entire category will get business from foreign vendors also. But the run up in some of the stocks, I think, is just been too fast, too swift. It's like saying that, these stocks have started running before they learned how to walk.
Yeah, okay, or perhaps started zooming into space. Okay, thanks very much, Somit, for giving us those details. In fact, let's listen into a market voice then. Vikash Kumar Jain, he's a strategist at CLSA, and he spoke about the outlook for IT, how the valuations in the IT space are less attractive as compared to banks, but still the preference lies with IT. Listen in.
IT and banks is clearly the two things that you need to get your calls right. Otherwise, it's very tough to outperform. Luckily, we've been a bit lucky in getting that call right over the last 2.5, 3 years. That's why our India-focused portfolio has done pretty well. I would say I am still in the camp that the recent recovery that IT stocks have seen will, have now again taken their valuations to levels which are not very attractive as compared to that. The other large sector, which is banks, is something where valuations are in general attractive compared to that sector. So within the two, I still prefer banks. For IT, I believe, it's just a long derating period, which started with early 2022. And just to kind of remind you, at that point of time when valuations went to +3 standard deviation to historical average, that was a point when everybody thought that this sector has changed forever after COVID because technology has become so important, etc., etc. And when something becomes so expensive one way, the derating period can also be, particularly when we have very good quality stocks, they don't really collapse in a matter of months. The derating period generally is longer, which involves correction of multiples. Yes, a few of them have become a little bit better in terms of valuation, but the sector in general, I think, is still not attractive from a simple valuations perspective.
Back with the market, let's put the spotlight then on more news and developments. And the government may extend the SBI chairman Dinesh Khara's tenure by around a year. ET now has learned from sources that this decision could likely be announced next month. However, due process for selecting the new chairman will continue. Let's get on board my colleague Ankur Mishra, who joins in with the latest. Ankur?
Yes, sources say that government is actively considering to extend the tenure of Dinesh Khara as SBI chairman for around a year. In fact, sources have informed us that this announcement is expected very soon, and the announcement can be made by next month itself. The tenure of Dinesh Khara as SBI chairman is ending on October 6 when he is completing his tenure as SBI chairman. Now, the government is considering for an extension up to August 2024, and this is as per State Bank of India rules of age criteria. Apart from that, Financial Services Institutions Bureau is also likely to continue its task of finding new chairman till the time government makes an official announcement of extending the tenure of Dinesh Khara. Now, under the chairmanship of Dinesh Khara, the bank has touched new heights. In fact, the profitability of the bank touched 16,888 crore in the last quarter itself, and the bank also posted 1% ROA under his chairmanship. Now, apart from Dinesh Khara, CS Setty is considered the front runner for becoming the next SBI chairman, and FSIB is likely to continue the process of interviewing SBI MDs because till the time government makes an official announcement, that process will continue parallelly. Now we need to wait and see how soon an announcement of this kind is made by the government.
Okay, we'll be watching out for Mr. Khara's reappointment or extension of his term for another 1 year, as we understand. But promoter Baring PE is looking to sell its entire stake in Coforge via block deals. The promoter will be offloading 16.3 million shares under the block deal, is what we understand. But what's going to be the FTSE impact in the stock? Soumit is here with that detail.
Well, Coforge will remain in focus because the promoter is looking to completely now exit from the company. Baring will be completely exiting from the company. They have put in around 16.3 million shares on the block. That is close to 26.6% stake. The floor price for this block is at 4,550, which is a discount of nearly 7.4% to yesterday's closing. Now the total block size will be around 7,400 crore rupees. That is nearly $893 million US. And IFL is the sole broker of this deal. Now the promoter of this company has been continuously divesting its stake since 2020. In fact, in 2023, this will be the third and the last tranche of a promoter, as they will be completely exiting from the company. Now, this exit of the promoter should largely not impact the company, given the fact that the company is professionally managed and they have given a strong revenue growth guidance even for FY24. They're expecting their revenue to grow nearly 13 to 16%, and this is despite the cautious spending environment that we are seeing in the US market, especially coming in from the BFS segment in the US market, and they're also expecting their margins to remain largely stable. So don't expect much of an impact on Coforge's financial and running going forward. However, this block would keep some pressure on the stock prices, given that it's a 26% stake that is coming on the block. However, there's a positive side to this also. Now, given the fact that the promoter is exiting, the free float of Coforge in the FTSE index is expected to increase. Now, because of this increase in free float, the weightage will also increase, which could lead to an inflow of around $29 million US as per Nuvama, which is close to 1.5 times its 20-day average volume. So keep an eye out for Coforge.
All right, we certainly will. Thanks very much, Soumit, for those details. Let's bring on board Chakri Lokpriya as well, who's joining in to discuss fundamentals and the stock individual stocks. Chakri, we're all over the moon, certainly with yesterday's massive feat. But for the equity markets, it looks like it's been the broader markets that have been zooming away. What's your assessment of the kind of outperformance that we've witnessed recently in the mid and the small caps? And do you have any particular strategy here?
Yeah, the mid cap and small cap stocks have done well and will continue to do well, simply because, they've been recovering from an earnings deficit over the last 2-3 years, and now the growth is coming back. Many stocks have run up, but there's still many stocks which are still very attractive. Now, over the moon is still a good theme because if you look at the different stocks, whether it's a large cap L&T or a mid cap like Hindustan Aeronautics, it opens the global market now for these Indian companies and the cost effectiveness at which the Chandrayaan moon mission was launched. And the multiples, actually, the stocks have had a phenomenal run, but they're not really that expensive. So whether you talk about L&T in the large cap, MTAR mid cap, Hindustan Aeronautics, which developed the landers, Bharat Electronics, which developed some equipment. There are a number of companies, and as when it brings the attention of global investors like Elon Musk, that's an important catalyst for orders coming for these companies' ways. And by the way, yesterday there were 8 million YouTube hits for the show versus SpaceX, which is Elon Musk, which had a 4 million hit.
Yeah, indeed. We were the first ones to attempt South Pole landing, weren't we? But anyway, let's talk about what the GIFT Nifty is indicating right now. Once again, a very quiet start, but it seems like slowly we're inching back towards that 19,500 print. Kunal, I do want to talk about some of the stocks that Chakri as well highlighted. The likes of BHEL, which saw a significant breakout day before, and then, of course, L&T, which continues to hold up. Do you think there's further upside in these names in the near term?
L&T is classical in nature because the stock has changed its trend, its behavior quite dramatically in the last 3-4 months of this market rally, of this rally for the stock itself. And I think from 2,200 when this move started off for L&T, it was a very gradual paced move for the stock, which is a typical behavior of the stock price. And then, I think somewhere around 2,400, 450 mark is where the pace accelerated a bit for L&T. The stock went into a breakout at 2,700 mark. There was a mild bit of consolidation for the stock, but even, the stock has given a breakout post at 2,700 mark for itself. So, time and again, the stock has proved that there has been a change of behavior, change of trend for L&T. The stock is doing exceedingly well. I believe that it still looks very attractive at current levels. BHEL could be a classical case of possibly a turnaround or a catch-up of a huge underperformance. The stock was a huge underperformer over the last so many years. 80, 85 broadly was a huge resistance for BHEL. The stock day before yesterday clocked that 110 plus mark, making it as a 4-year, 5-year high for BHEL. And with momentum coming back, volumes looking very, very strong for BHEL in the last 1-2 weeks, I would believe that the stock should be up for at least 125 to 130 over the next 1.5 month.
Okay, that's the word coming in on BHEL. But in the meantime, let's also get in a take, Chakri, from you as to what the outlook has been on Jio Financial Services, given that we were just discussing it a bit earlier as well, third straight day on the trot that it's been on lower circuit. What's your assessment as to what this means for the shareholders?
Yeah, in terms of the technical selling of passive funds is on one side of the equation. The other side of the equation is, the Jio actually has a very unique situation in the sense companies build their businesses gradually over time and then raise capital to meet their business requirements. Here is a company starting off on the block, Jio, with capital already in place, and then now looking to grow the business faster. This will allow it to grow much faster. Even the implied valuation, all the stock about fair valuation is actually very low numbers, because you start applying the multiples that you would to NBFCs, then there is a lot more upside. So once the technical selling is over, I think Jio Financial actually does much higher, goes much higher.
Okay. 28 points higher for the GIFT Nifty, and we are going to be cruising very, very smartly. Chakri, we've seen a massive rise in companies which have got anything to do with India's space program, and I'm talking about the stock price appreciation, whether it's L&T or BHEL or even Centrum Electronics. How would you approach that space now after the success of Chandrayaan?
Indeed, if you look at companies like the names that you mentioned, L&T, even take Bharat Electronics. Now, Bharat Electronics or Hindustan Aeronautics. Now, Bharat Electronics is expanding its range of products, and it's including a lot of technologically advanced components into its business. Now, this makes this company and companies like MTAR and Hindustan Aeronautics very attractive to investors, not just investors, businesses, such as the SpaceX program of Elon Musk, because there is a huge new race. Earlier it was the arms race, now it is to discovery of new rare earth materials which will help green energy, etc. So which means there is sufficient order book out there from global investors, and so it now opens the export markets. So companies which PSU companies have been given lower multiples, defense companies were given lower multiples in the past because of the limited order size, but now I think they will be a re-rating.
In the meantime, some of the other stocks as well that within the broader markets that did fire up in yesterday's trading session. You did have the mid and the small caps, as we said, that did manage to outperform. There was something like an SCI, RCF, MMTC. They all rallied hard and fast. And Sun TV as well, up about 5% in trade yesterday. Let's get in your thoughts on the charts, Nooresh. How are these counters looking?
Sun TV is the most interesting one, given that the way the stock has gone sideways for a number of years now. So if you look at the stock, every time over the last, say even from pre-COVID, every time the stock would come to 550, 570, the stock has collapsed. Even back in 2020-21, it made multiple tops around 550, 580 levels. Back in 2022 also, the stock came to 550, 560 levels and corrected back to 400. The interesting part is yesterday is the largest volume the stock has seen in the last 1 year. So giving some first indications that the stock could be changing tracks. But for now, I would wait for it. A short-term target price is 600, 620. That is where the previous high is in 2021. So for now, should move ideally towards 600, 620. And once we go beyond that, that is where we call it as a multi-year trend change. So for now, the stock is on radar for a shorter term trade, but it could develop into a multi-year breakout.
Chakri, there was an interesting discussion that Nikunj had with the management of Bharat Forge, and they were talking about their long-term growth prospects, really riding the manufacturing wave, saying that they're confident that their ROC will be 22 to 23% by 2025, etc. Just wanted to get in your thoughts on Bharat Forge in particular for the long term, and anything else within this space that you believe merits a mention.
India is going through a manufacturing renaissance in great part thanks to the government initiatives like PLI. And Bharat Forge has made use of that and expanding also into the defense space. While its defense foray is still very small, its manufacturing, the forging space is still very sizable, and it's looking to expand its EV portfolios, apart from the regular portfolios. Now, a combination of all these things, if you ascribe individual valuations, and plus its export market which has a very good market share. Now, some of all these various parts, very different businesses, underlying theme being manufacturing. I think Bharat Forge does well for the longer term. Shorter term, I think the valuation is kind of run up.
Which has been in focus is Torrent Pharma as well as what's happening with Cipla. Now, the Economic Times just yesterday reported that Torrent has actually joined the fray for Hamid family's stake in Cipla, and it's up against the likes of Blackstone as well as Baring PE. But this chatter is only gaining further momentum. Now, a couple of brokerages believe that this is going to be sentiment negative for Torrent Pharma. They're saying that Cipla's business is margin dilutive to the TRP. It's got higher exposure to US R&D, low margin ROW, as well as the Saga business as well. And it remains to be seen if any changes in the settlement to generic Revlimid, which can impact Cipla's US market share agreement or not. And plus, obviously, this acquisition is going to come in at a heavy price. So will that be able... is that something that's going to be digestible on Torrent's balance sheet or not? Now, both these stocks were under pressure in trade yesterday. Of course, that's the this year move on Torrent Pharma, and the stock has climbed up 25%, and I think Cipla will be an even better chart. But yesterday, both these stocks were under pressure. Having said that, India business of Cipla is nearly 2x of Torrent Pharma's business size. India business definitely is a good fit for Torrent Pharma. There's no taking away from that. But Chakri, how are you mapping this news flow, which is doing the rounds?
I think it's now a fairly well-established fact for quite some time that Cipla is looking because it's next-gen, etc. issues. And so Torrent Pharma is pretty much trying to consolidate its space over here. But this will lead to a fairly significant amount of earnings dilution due to a couple of reasons in rationalizing the portfolios and as well as the balance sheet issues. So against this backdrop, I think Torrent Pharma has already done its bit running up. So I think we would wait on the sidelines.
Kunal, where is pharma headed? We had a deep swell. Is this the beginning of a new multi-year trend in pharma? I mean, could they do, let's say, what banks did in 2022?
very much possible, and I think this time around the change could be that large cap pharma stocks, few of the large cap pharma stocks may not participate in the same gusto. Like for example, Sun Pharma is nowhere closer to its 2015-14 highs. I think 1400 was the 1400 to 1500 was the high for Sun Pharma. In that time frame, the stock is still at 1100 or 1170 odd mark, still struggling. Cipla, Lupin apparently has done pretty well. Lupin is also nowhere close to its lifetime high levels, but the stock, I think from 700 odd levels, has recovered very well for itself. So there are few large cap pharma stocks which have recovered, but then when you look at the the first 3 months, the first 6 months, the kind of participants which had happened, it was actually the mid cap names which outshined the large cap pharma stocks. I think Zydus Life is one of the best gainers so far on a YTD basis, followed by Aurobindo Pharma, Glenmark Pharma. So these are the ones which have been beaten down significantly. They are the ones which are seeing recovery. Large cap pharma stocks were the ones which were late to participate, and they're still into their own very steady, gradual uptrend. There is no major or a swift momentum which is happening to the large cap pharma stocks. So I think the move should be concentrated on the ones which have been actually performing very well. We'll be very bullish on the likes of Glenmark, Aurobindo Pharma, as well as Zydus Life over the medium to long term.
Nooresh, a series of power stocks starting from NTPC all the way down to JP Power. The power space is charged up. 220 power is great, 440 is when it becomes danger. Is power space now between 220 and 440 where you cannot buy everything and anything?
So I would say if you look at power stocks, the problem is just because this whole sector did nothing for 15 years. The recent moves look a little more spiky in nature. So if you look at Tata Power, which has been the torchbearer of this rally from 2020, the stock went from 60 to 280 levels. And from 2021, where it topped out, the stock went to 200 and we are still at 245, 250. So it's still not reclaimed the previous highs. Then if we go to NTPC, on a non-dividend adjusted basis, the stock only came back to 2007 highs, even after such a move from the bottom and outperformance. A lot of other power names, if you look at PFC on a dividend adjusted basis, may have crossed an all-time high at 120, but it's not done a huge move from 2007. So, and the smaller names like a GMR Power or other names, they've corrected 80-90% in 2008. So the view is if the sector is changing after 15 years, it could continue to surprise on the upside. And the momentum actually starts once we cross 2007 highs, 2008 highs, 2010 highs in a lot of them. So the trend is positive. Say another name, something like a NHPC, SJVN, they've not gone up massively. So NHPC got listed somewhere around 30-40 levels back in 2009, and today we are at 50. So if you look at the quantum over the last, say, 1 month, you may see some stocks have moved up quite a bit. But if you look over 1 year, 2 years, nothing has happened. Look at 15 years, it's been terrible. Terrible is an understatement, given the stocks have gone nowhere. So the view is it's a strong trend which has just started. So we are not at 440. We could be from 220. We are at, say, 260 to 300.
Go back to the Bank Nifty. Why are we going back to the Bank Nifty? Fell 5% down for the Bank Nifty, but yesterday the Bank Nifty did exhibit some signs of life. And you do have a little bit of short positioning, if I may use the word, on the Bank Nifty. So if you're making a case that global cues are strong, there is weekly expiry, FIs have turned net buyers, tomato prices have come down, inflation is seasonal. Could it be the turn for the Bank Nifty? And could there be a mild bout of short covering in terms of where the FI positioning is or where the market positioning is? So Kunal, Nooresh, let's assume that markets go through a mild bout of short covering like we saw yesterday. If that is true, then where are the shorts in the market? Anyone can take it.
Well, I would believe that yes, banks and specifically the large cap private sector banks, ICICI Bank. So I was looking at the positioning in terms of the open interest. ICICI Bank, Axis Bank, HDFC Bank. These are the three key names where there has been good amount of short built up on the private sector banking stocks. From the auto pack, it's actually the likes of Maruti, which has seen a very high amount of open interest built up. and the price trends have been negative, of course. So we look at this in comparison with the built up of short positions. Even the likes of Hero MotoCorp as well as Eicher Motors, these stocks have seen a rise in the open interest with the price trends a bit more negative over the last 1 to 2 weeks specifically. So these are the few pockets where, on the large cap front specifically, where there is good amount of short built up. And if the reversal happens, so the reversal could be two pronged. One is that whether the weaker stocks, they are the ones which recover, like what we saw over the last 2 days, where the mid caps outperform the large caps, traditional large cap names. But yesterday was one of the days where large cap stocks managed to outperform. So, for example, ICICI Bank, Axis Bank, these were the few names which even Maruti, I think, recovered some couple of percentage points yesterday. So there was a good amount of short covering which was seen on few of those stocks. But then we need to see maybe a second or a third round of short covering that could determine a very powerful comeback from these stocks.
Nooresh, where are the shorts? For markets to go higher, you need global support, which is there. You need comeback by FIs, which has happened yesterday. Now the short sellers would say, watch your back, run, run, run. So where are the shorts? Where do you think there could be a bout of short covering?
So the shorts are not really large if you look at, because none of the stocks have really corrected in a big way or say making topping out conditions. But if you look at it, it's very clear banks is the place where there has been underperformance. So we corrected from say 20,000 closer to 19,250 on the Nifty, but we corrected a lot more on the Bank Nifty. We went to an equivalent level of 18,500, 800. Bank Nifty at 43,600 was at the same place where it was in December of 22. So banks is the place. For example, if you look at HDFC Bank, gone nowhere. Kotak Bank, gone nowhere. ICICI Bank made a new all-time high above 960 and the stock is still at 960. So it's the banking space where the shorts are in place. So if there has to be a short covering move, it has to be in the banking side.
No, Aman, I mean, that's my limited point here. You look at, you make a case that this market has not broken down, right? If the market has not broken down, what are the chances that it will recover back? For markets to recover back, it first needs to go through a little bit of repositioning in terms of shorts. Not that shorts are intense in the market, but you may actually see a flavor of short covering. If there is a flavor of short covering and there is weekly expiry today, where are the shorts? So I think, Kunal, apart from banks, I would say autos also.
Yeah, few of the autos also.
Especially Tata Motors.
Not Tata Motors, Maruti, Hero MotoCorp, Eicher Motors. These are the three names.
So if I have to put a graphic out saying that where are the shorts, what names would it include?
So from the auto pack, it will be Maruti first.
No, across the board.
So these three key auto names. Then you have private sector banking stocks, large cap ones, which are also heavy in shorts.
Like an HDFC Bank?
Like an HDFC Bank, like an ICICI Bank also, which had seen a good amount of short pile up. Even Axis Bank to a larger extent. These are the 6 names which I do track very closely and have seen the data.
Chakri, I'll go back to Jio Financial Services. And my point is that, look, there was a real value which brokerages had given to Jio Financial Services. Between 160 to about 190 or 170 to about 200. The price discovery happened at 260. So the price discovery happened in 260 and now the stock has fallen by 15% from its listing. What is going on? I mean, if the price discovery happened at 260, when the stock is listed, how come it is falling? Because it's the market which 20 days ago only discovered the price.
Indeed, and every day when I ask my trader, clearly the amount of build-up on the sell trades which are by the passive funds is still shows no sign of abatement. So they will sell irrespective of whether the date is pushed few days this side, that side. Now, so the price discovery, I think, will happen once this technical selling is over. And I still strongly believe that, having been it starts off the race in a very strong place with strong capital, which is the number one requirement for any NBFC. So, which means I think over time, it'll actually see a re-rating of the multiple, which still on the fair value basis is hardly about a couple of times book value, where it should trade much higher given its NIMs will be much higher.
Let's get in a sense as well, Chakri, as we're now gearing up for the festive season, it definitely is going to be very critical for a lot of these consumer durable companies as well across the board. What is it that you're anticipating from this festive season and, the kind of cheer it could bring even for, say, FMCG companies?
FMCG companies, probably the uptick in terms of consumer staples, probably not much in terms of the traditional, other than the traditional bonds. Whereas companies which are hugely underperformed, companies like Crompton Consumer, Voltage, these companies have done nothing for fundamentally and valuation-wise for the last 1 or 2 years. They simply haven't gotten their product portfolio right, no pricing power, no margin, etc. Recent spends by the consumer for around the August 15th weekend, if there's any sign of indication for the festive season, will show that these companies, consumer electronics companies, will begin to make a comeback. So I think that, including Havells, Crompton Consumer, these companies, I think look okay.
Where is SGX? Or not SGX, sorry, GIF Nifty, muscle memory. It is GIF Nifty, not SGX. It's come to India, not in Singapore. 33 points higher. So, Nooresh, I'm just spending a lot of time in understanding the Nifty today. Why? Because everybody in a sense is now on their edge. Short kare, long kare, breakout hai, breakdown hai. So the breakdown has failed. Now breakout should be the trade.
So say 2 days back, I turned a buyer because it was a risk reward trade at 19,350, 400. Now the next view is when we cross 19,600, that is where it becomes a breakout trade. The flag formation, which has continued from 20,000, 19,000 to 19,250, breaks out. So out here, it's a hold or a buy on dips. And on the way up, if we cross 19,600, it opens up a 400, 500 pointer move. So for now, it's a hold, and closer to 19,400 is where your stop losses are in, risk reward is great. You have a 100 pointer risk and a minimum 200 pointer target, and this could even go back to 20,000. So the case is buy on dips with a stop loss below 19,300 now.
19,539. The GIF Nifty, not SGX, is indicating that we are in for a strong start. Power stocks, Chakri, we've discussed them, but I want to go back to power utilities specifically, not power capex, not power ancillaries, not power service providers like REC and PFC, which give financing. I'm specifically talking about this whole comparison of solar versus thermal. There is a Tata Power which is not expanding in thermal, and there is an NTPC which is expanding in thermal. Which way would you vote? Clean energy or fossil fuel fired plants?
I think both. For example, if you take NTPC, the reason for the underperformance was very well known. Even now, today after the run-up, still the plant load factors are only at about 70%. So which gives it sufficient upside in terms of operating expansion. Second is, with the new, all those environment treaties, India is supposed to be compliant by 2070. So which means if NTPC starts establishing thermal power plants today, and its useful life is for the next 35 years, it would still meet the 2070 deadline. So it has given a new lease of life because India is still a power deficient country. Thermal is still, as the recent Ukraine war has shown, it's come back to life thermal. That is, even though it's not clean and all that stuff. So I think there will be a re-rating, continued re-rating for NTPC. On the other hand, companies like Sterling Wilson, which are not only service providers, but also now looking to establish some presence in the solar, in the green space, both in India and outside India. Those companies, again, will see a significant re-ratings as they clean up their balance sheets because of over-excesses of the past, and also now, and so that will provide them with new legs of growth. So I think both the green and thermal are looking good, because in the case of NTPC, they'll also acquire a number of these companies from NCLT.
Let's get in a sense as well as to just waiting by for those pre-open rates, but wanted to also ask you about your outlook, Chakri, when it comes to the entire metals basket. Are there any preferences within this space?
Kind of underperformed. Valuations are still, valuations are attractive, but the business momentum is still just not there because of the global uncertainty, and therefore, while Jindal Steel and Power, the valuation is still probably about 5 times EV/EBITDA. We would still stay away from it as a sector, but maybe a couple of companies like Jindal Steel and Power, maybe Hindalco.
The Chinese factor. And with economists as well talking about the activity in China's economy skidding. So that too will be another factor when it comes to the metal stocks. That's the pre-open rate, 19,550 for now being held on to. Let's find out what the mid-cap strategies are as well from our chartists. And Nooresh, what's looking good today?
Banks again. The next bank which I look at is Federal Bank, which I've recommended before. Finally, the stock has broken out above the 138 mark as well as hit a new 52-week high. Clearly, a good enough consolidation done, a range-bound move done, multiple bases at 120, similar tops at 138, 140 crossed. Finally, showing a lot of leadership. Yesterday was strong volume, so this could be a start of a new fresh uptrend for the stock towards 165. Stop loss to be kept at 135.
Okay, those are some stock strategies coming in. Let's just take stock of what else is going to be in focus today. Let's see what Reliance is up to in the pre-open rates after that investment coming in into Reliance Retail. Remember, QIA has picked up about less than 1% stake in Reliance Retail for a valuation of $100 billion. So that's going to be one stock in focus. Surely put a soft floor at least to the stock, and it's indicating an uptick of about 1.25%. But Kunal, what are the stocks on your radar?
Well, Paytm is something which in the last half an hour, last 1 hour moved up pretty well above the 900 mark. So looks attractive from a short-term trade. 956 as a target for Paytm. Stop loss at 886.
Okay, Chakri, we'll let you go on that note. Thanks as always for taking the time out and joining in. Lots of stocks on our radar this Thursday morning. Let's quickly wind up and, tell you what's happening outside the world of equity markets back home. And auto giant General Motors has announced layoffs. The company is set to now eliminate as many as 900 employees. Alongside, the company has also announced the closure of its IT Innovation Center in Arizona over the next couple of months. And shifting focus to some geopolitical news coming in this morning, and it seems that the leader of the Wagner mercenary group, which led an unsuccessful coup against Russian President Vladimir Putin, has reportedly been killed in a plane crash. All 10 people on board the flight are said to be dead, according to the Russian authorities. And to the world of sports now, BCCI has partnered with Book My Show as their official ticketing platform for ICC Men's Cricket World Cup this year itself. In fact, the tournament is going to feature a total of 58 matches, including 10 warm-up fixtures, hosted across 12 prominent venues throughout the country. And chess grandmaster Pragyananda has held his ground against the world Magnus Carlsen in a gripping showdown at the FIDE World Cup final, forcing a draw in the second classical game of the series. In fact, the encounter saw both players engage in a strategic duel, resulting in a balanced position that led to a peaceful draw after just 30 moves. The champion will be decided today at the tie-breaks. And after the all-important 15th BRICS summit in Johannesburg, PM Modi is expected to depart for Greece tomorrow. PM Modi will be visiting the capital city of Athens at the invitation of the Greek Prime Minister. The visit is said to be of great importance, and to note that the last visit by any Indian Prime Minister to Greece took place 40 years ago. And some sombering news from Mizoram this morning. A little over 20 lives have been lost after an under-construction railway bridge collapsed there. Several others are still feared trapped at the site. Rescue and relief operations are underway. PM Modi has announced an ex-gratia of 2 lakh rupees from the PM National Relief Fund for the family of the deceased.